So Mike McMurray, Mike Hartman, Sanibel Captiva Community Bank, thanks for coming in today.
Thanks for having me, Mike. Happy to be here.
This is awesome. This is a big thing right here. We're talking about mortgage rates, interest rates, just the whole thing, what's going on in our world today with all that. It hasn't really been a topic of conversation as much over the last year or so as far as interest rates rising. If anything, where were they going to go down to?
Right.
Now we're talking about the opposite.
The opposite, the big inflation word. Fed is going to slightly raise rates. I think it's going to be slow and steady. I don't think they can do anything too fast, too aggressive, half-point raise, whatever it's going to be in March. But I think because of COVID and all the extra components that are going on that we've never seen before, they're going to raise, but I think they're going to do it on a steady, slow basis and watch how everything reacts because there's too many factors. Opening back up, the markets are opening back up. We've got some pent-up money ready to be spent. We've got to watch it and get realistic results.
Because, again, trying to slow it down, is that what they're trying to slow it down, basically?
Yeah, they want to slow it down a little bit. A lot of it is the inflation that you hear about. As I said, people get nervous because they are connecting us with, we've not seen inflation like this since the 80s. And people remember those rates, and they make that connection. It's not going to happen.
I've heard from clients over the years, Mike, inflation, and now it's finally real.
It's real, yeah.
And I've never experienced that before, really. I mean, I was talking to my brother the other day at Lennar. He's head of Lennar, runs Tampa all the way down to Marco Island. And he was like, Mike, we haven't raised prices for 10, 12, 15 years. It was bound to happen. Now they're talking about, again, going off into the building industry, the perfect storm because of the lack of materials, labor, all that good stuff. Again, like we get back to the interest rates, Fed trying to slow things down, maybe.
Trying to slow it down.
But keep it healthy.
And I know exactly what your brother's going through because I do a real good share of construction loans for the bank. And we now have probably 50% more work than we ever did. And what we have to do is we have to factor the builder's availability, the permitting times, the lead times. We're being told now a lot of places you can't get trusses for a home for close to a year. So we can't really start those loans and do that 30-day close anymore. We're really getting to know our customers for a year and a half sometimes.
It's amazing when you talk about a Lennar, a big boy, probably the nation's largest builder or one of them, having trouble getting garage door openers. To close on a house, to get the CO.
I mean, we have people waiting for sod or appliances are 3 months behind or something like that. And it's frustrating because a lot of them are trying to build a new primary. They might be in a temporary rental. They've sold their other house, something like that. So it's stressful. We get there. It gets done, but it's definitely a different process today than it used to be.
So interest rates, going back to interest rates, we think they're going to raise. When I first started in January, I heard, where were they at in January?
You could still hear the low 3, high 2s depending on the file.
High 2s. And now where are they?
We're a 30-year right now. This morning I was pricing it out at 3.875.
And what is today? February 18th, February 19th, 2022.
And short period of time.
And then the Fed meets in March?
In March.
So
we're expecting a raise there. But typically what happens, we're already seeing, because of the media coverage on this, you're kind of seeing that increase baked into the price already. So they'll raise it. Hopefully it achieves what they want. And, you might see some more. But as I said, I believe because of all these new factors that they've never had to deal with, I think you'll see a slow and steady increase, and they'll get it to where it needs to be.
Where do you think that needs to be?
I don't know, but I do.
I mean, naturally, we're going back in the 4s.
We're going to be in the 4s at some point here, but again, historically low rates. I purchased my first home 8.25%. Thought it was great. I don't think we're going to be raising too high. It's going to be slow and steady. I do see us landing somewhere in the 4s.
It's amazing how we forget because I remember like in 2000 or somewhere around there, I was like doing a newsletter to my clients and prospects, and I said interest rates could be at 5.5 or something like that. And they were like at 6s and 7s, and we were like, wow. And now people are like, oh my God, they're going to go, 5, 6, 7. Still not too bad.
Yeah.
Compared to what you said earlier, 18.
We just don't want to see a 1 in front of
1980.
it. Exactly. Yeah. I mean, I remember my dad talking about that. 18.5%.
And people were buying investment property back then still at those rates.
Yeah. It was a crazy time.
Yeah.
But again, looking back to the 80s, all you had to worry about was labor and the cost of oil and all these minor components.
Yeah.
With this COVID shutdown, there isn't an economist in the world, in my opinion, that could go in and basically determine this rate's going to trigger this and do that.
Yeah.
There's so many things that we've never seen before.
Yeah.
Who'd have thought you'd have your restaurant shut down for a year, or, we had that whole round of PPP, thank goodness. And, I think...
And you guys were big on that.
We
that
were
PP
big.
loan.
We were big.
SanCap Community Bank stepped up, helped our community.
That's
big
what we're all
time.
about. That is what we're
You
all
had
about.
other banks looking at SanCap Community. Can you help us with our clients?
Yeah, we did. We
Some
had
major banks too.
Major banks were not able to keep up with it.
Yeah.
We had folks on our staff looking at the local news, and if somebody mentioned they needed help, we were calling them.
Yeah.
And we had a few loans like that. People came in, we staffed it, and we just head down and focused on it. I'm proud of that. We really helped out the community. People still talk about it. People are loyal to us.
Yeah.
That's the whole function of our bank. I mean, we do stuff that not a lot of banks can do.
Well, again, we'll get into it a little bit later, but community bank.
Community
Bank is
all
about the
about
people.
It's about all the people that keep our local economy going.
Yeah, you guys
exactly.
do a great job of it, one of the best.
Thank you. I appreciate it.
So back to interest rates, going to raise them. I heard probably about a month ago, probably 3 to 5 times, and then now I'm hearing maybe even 7 times. Who knows where they're going to go? We kind of have an idea, maybe, possibly. How do you think that's going to affect the market? The first-time home buyer, the second. The investment guy, the second homeowner, the primary homeowner that's been here for a while, that's going into their second or third home, whether they want to bump up, whether they want to move down.
It's a fantastic question, because typically if they're going to raise the rates, what that may do is, if you have less borrowing capacity, it should stabilize prices on homes.
I think so too.
However,
especially in certain segments, not maybe the luxury and the high end so much,
right?
Because those guys are not only watching interest rates, even though they may not be getting a loan, and some of them are, even though they can afford to pay cash. Money's so cheap, they've been getting loans too. So a lot of creative things that have been going on with people and finances and investment, all that good stuff. But crazy.
If it stabilizes prices a little bit, is I think what they're trying to achieve. But we're in Lee County here, and we're in a really unique spot right now due to COVID.
Yeah.
Most of my buyers coming down are coming from those northern places and literally taking an early retirement. They've realized now that they can work remotely for as long as they want to work, and they're buying these homes down here, and they're creating a lot of demand.
Yeah.
My
buzzer's going off. I'm sorry about that. That's a buyer wanting to catch on the interest rates before they go up. So sorry about that.
So we're talking about Lee County, and just the demand, and there's talk of we're undervalued here if you compare us to Sarasota or Naples.
Sarasota, Naples, Bonita.
Yeah.
I mean, those island markets. We're all of Southwest Florida. Basically, Fort Myers, Alva. Our bread and butter is Sanibel and Captiva, but I grew up in Fort Myers, so I don't forget where I come from.
Right.
So I help those people. We've got great people in Fort Myers and just all those partners that we have, both on the island markets and in the in-town markets, Cape Coral also. It's amazing the different markets.
It is. But Lee County in itself, I think people are realizing they can come here. You're comparing that house in, like I said, Sarasota versus Naples versus here.
Yeah.
You can get a lot of house here. And who thought we'd be saying that after seeing what homes are coming on the market for?
Yeah. What's crazy is people coming from California for the first time, they're looking at $700,000 here and going, oh my gosh, $700,000 here is, it's a really nice home still. Whereas out in California, not that it's not a nice home, but a little bit of difference.
Big difference.
For
sure. Yeah.
So we got people coming here from all over. You're dealing with them.
We're dealing with them.
We're dealing with them too, but you're dealing with them, helping them get that home, finance that home.
We're having to do a lot of the approvals and a lot of the pre-qualifications up front, because you guys need an answer fast.
Yeah.
You guys have to jump fast, and we've got to know we've got a good deal and a good loan behind it.
And it's a process right now today still, too, to get a loan. Because,
it is.
But it's good.
It's
compared
good.
to 2006, 7, 8, all those times in there where people were getting loans, all over the place. The regulations, things that have been set up to help prevent what we went through in 2005, 6, those times, we don't really have those today. It's a little bit more...
You're seeing some products come back, like a bank statement loan, but we're markedly different than we were back then.
Yeah.
And, everybody fought a little bit of change. Nobody likes too heavily regulated procedures. Yeah. But I think by in the end of it, when we got used to it, TRID, all of the new things they had to put in place from the 08, 09, it's actually, safety and soundness, it's good.
Yeah.
We don't want to repeat that. Nobody does.
No.
I think the appraisers are doing a great job right now.
I think they are too.
Keeping things realistic.
Yeah.
Yeah.
That's I say that and I talk to a lot of appraisers.
Yeah.
Because they're our friends. Mm-hmm. We can't manipulate them. We never did.
No.
They're going to do their job. But it's tough. And they're looking at the market a little bit different than what they did before, where they understand that the appreciation, what the comps that they're looking at, things like that, and they have to factor in certain things based on the area, the segment of the market, things like that. So it's a different time.
It is. And I saw a good deal the other day. We had, not that you like to see this, but somebody had a deal on a lot, and it appraised way below what the deal on the table was.
Yeah.
And both parties decided to walk away and revisit it later.
Yeah.
Rather than somebody overpaying or, so we don't want to skew the comps, right?
Yeah. Yeah.
So that's
next month, though, it'll probably be over that price.
Who knows, right? I know. It wouldn't surprise me. But it's nice to see how people have a conservative approach to it, even in this market.
But getting back to it, Southwest Florida is a good deal.
Yeah, I believe that.
Fort Myers is a good deal.
Yeah.
It's a good value. I hate to say good deal, or don't like to say good deal, but it's a good value based on those other markets, Sarasota, because I look at those and I'm like, oh man, people are finding Fort Myers. They're really starting to appreciate what we have here, and we're just growing. We keep growing.
We're growing.
I know you've been to Topgolf.
Yeah, of course. Yeah.
I mean, not all big cities have Topgolf.
No.
There's a reason why they put it here.
We've already done a couple of bank events over there and had some of our employees over there just for a little bit of bonding type. It's fun. Yeah. We're
Restaurants,
getting a lot of
Whole Foods, Topgolf, all those things coming here. I remember back in the 80s, from Fort Myers to Naples, you had cow fields going that was in between. Yeah. And now it's all developments. Yeah. And it's been going that way, but it's just everything's starting to go east. I was talking to somebody today about Babcock Ranch and them also expanding Highway 31.
Yeah.
And just think about that Babcock area, what it's going to do.
Yeah.
There's a reason the group that started Babcock Ranch kept that property along that road back in the bad times because they knew what was going to come.
Yeah. Our own little villages, right?
Yeah.
It's an interesting spot. We're getting a lot of cool stuff, like you said, and it's making the area a lot more enjoyable, a lot easier. It's a great lifestyle.
So besides interest rates, and people, they are going to go up, but don't be scared because they're still incredible rates.
Don't be scared.
Yeah.
And remember that depending on your situation, there's always a way to tackle rate. Okay,
Yeah.
So people talk about teaser rates. People are, well, what's rates? It's 3.7. Well, why is he 3.7 and 4? Basically, your rate's going to be determined by your credit score.
Yeah.
It's going to be determined certainly by the loan to value and your debt ratios.
Yeah.
So you could have same house, same price, two different borrowers, two different rates. So, the rate is comprised of a lot of different parts. They're fairly similar. You'll see some adjustments.
Yeah.
I don't think people need to be worried. We're still in historically low times with rates. I think they're going to continue, even if we bounce into the 4s.
Yeah.
We've been there within the last few years, I know. It's a hard pill to swallow. Yeah.
Well, it shouldn't be.
It shouldn't be. I know. It shouldn't be, but it is because we've gotten so used to it.
Yeah.
I mean, look when they cut the rate for COVID when it came out. We had this influx of refinances. We were putting refinances in with our lender, and they couldn't even review them for 30 days. That's how many there were.
Yeah.
And there's also a school of thought that they're going to start raising. And if you look at some of these economists, they're predicting that then they could come back down. There may be an opportunity to refinance then. There's so many factors that anybody who feels like they have a good handle on it, I think, is guessing.
Well, I heard, and it's so true, that it's a buyer's market just as much as it is a seller's market. The sellers are going, Mike, if I sell, where do I go? Where do I go?
Right.
Well, there's always some place to go.
Right.
Because you just got to be ready to buy.
You do.
Because there are things popping up. They're just selling quickly.
Right.
So if you need to sell your home before that property pops up, I always tell my sellers that you can dictate the closing. You can delay the closing. You can make it subject to finding something within 90 days. And if you don't, you can get out of the contract, or you can delay the closing, like I said. And if you find a property, then you give the buyer 30 days to close, because maybe sometimes they have financing. But they've already started that process with you. They just haven't locked into a rate, most likely.
Right.
But you've got all their information. Should make it pretty easy to get it done.
Yeah.
But then you also have the cash buyers. But there's ways to overcome that. Mike, where do I go? And then as far as the buyers go, buyers are, it's feast or fathom out there trying to get that property, and multiple offers coming in. So again, the other day we had one new family to the area, doctor coming into a new practice. And I said, present that letter from you and your family and the little kids, and show why you're so happy and excited about buying this home, and then get that reference letter from the practice that you're going to work with. Get that reference letter there from them, but most importantly, get that pre-approval. Have that banking relationship. And the thing is about SanCap Community Bank, for people coming into the area, what I like when someone says to me, when I say to them, hey, where are they going for financing? If they say, well, I'm using my bank up north, or I'm using a mortgage broker. Nothing wrong about mortgage brokers. But when I hear the name SanCap Bank or some of these other banks out there that are local and ran by some of the people they are and people that work within like you, I'm more confident about that buyer.
Thank you.
I'm going to look at that pre-approval letter with a lot more,
we've got a lot
bigger level.
We've got a lot behind it.
Yeah, because I can call you, I can call the president of the bank and say, hey, what do you think about this guy? And they, Mike, that loan's going to get approved. Unless there's something there that nobody knows about, it's going to get approved. They look great.
Yeah, I'm in some form or another working 7 days a week, whether it's texting clients. I do more pre-quals on the weekend because that's when people want to shop. But I think, like yourself, realtors love us because essentially, if like you talked about, it's very hard. It's been very hard to get a loan in COVID, self-employed. Yeah. It's arduous. Yeah. It's a task. Yeah. So what we do is, I think the realtors like us because if we run into a problem in the market, conventionally, we just pull it back in-house. Yeah. So instead of a denial or a delay, we pull it back, we underwrite it in-house, and then, you have a deal on the table. So,
I've never had a denial from you guys.
No.
Not because you guys are doing something that you're not supposed to. It's just you guys know what you're doing. And you know your client up front.
Right.
You put all the ducks in a row, dot your I's, cross the T's, all that good stuff. Yeah. And I've always had a smooth deal with SanCap Community.
Well, we appreciate that. We work hard at it. Yeah, I mean, a lot of the deals are easy to look at. Yeah. And there's a lot of different ways to approach it. Yeah. And having the in-house portfolio allows us a little more flexibility there for sure. Yeah.
So your regular loans, people are going for. What are some other creative things that you're getting into right now?
Well, getting back to what you talked about, where do we go? Yeah. I'm now doing a lot of bridge loans.
Bridge loans.
Yeah.
What's a bridge loan?
So a bridge loan, somebody owns a home. They don't have to own it free and clear, but they've got a fair amount of equity in the home. Yeah. I did one the other day in Marco.
Especially now.
Yeah, exactly. I did one the other day in Marco. People are moving from Marco and moving over to the water in the Cape. Yeah. Their home in Marco is worth, say it's $2 million. Yeah. If they want to get a house in the Cape for $1 million or $1.5 million, we can go ahead and lend them the full price on that new house and wait 12 months for them to sell their other house. We don't have any prepayment penalties. Yeah. So essentially, what I'm finding is these folks love it because now they've got the new house. They may want to do a little renovation on it, so they're still in their other house. They're not having to rent. Yeah. Conversely, when they go to sell it, what we're finding is they'll sell it in 5 or 6 months, and they're getting more money for it because they staged it properly.
Or a lot sooner than 5 or 6 months.
Yeah.
Could be a week.
Yeah, it could be, but most of them are like renovating the new one, staging the old one. Yeah. And those typically are 5-6 month process.
So when you do a bridge loan, What's the interest rates like on something like that? I mean, are they a little different?
We're keeping it in-house, and we're going to do that at 5.375,
Okay.
12 months interest only.
But you're paying it off.
They're paying it off, and there's no penalty to do so.
Yeah, that's great.
So in that case with the bridge loan, it's really the cost of doing business with that loan, because we're finding that because they staged the old house properly, they weren't in a rush. They're capturing some of those fees back with the sale.
Yeah.
Yeah.
And they're buying something probably at a really good deal.
They are.
Or where they want to go.
Right.
And then they're selling something, most likely just keeps on going up.
And let's face it, it's right. And let's face it, it's really hard to do both of those levers at the same time. The simultaneous closing.
Yeah.
It's really stressful. It takes the fun out of it for everybody.
Yeah.
And then you get down to the wire, and there's always some little thing where this could be delayed or we couldn't get a mover. So this way here, it's a lot more casual.
Yeah.
The fees are not anything out of sight, so people are looking at it like a real viable way to make that switch from one house to the other.
Yeah.
Yeah, we're finding
and you
that
can't do that just with any bank. I mean,
you can't. You know, we do lot loans.
Yeah.
You know, we're doing a ton of lot loans right now. People are buying them, even if they're not going to build for a year or two. They want to secure that land.
Yeah.
You know, everybody feels the demand is gonna dry up the supply, so they're buying them now, and we've got them in our portfolio just sitting there. And the construction starts we have now we've never seen before.
So that brings up an interesting topic. Construction loans.
Yes.
With the delay in construction, with materials. That's a little bit different animal, isn't it now?
Real challenging.
Real challenging.
We're good at it. I like to say in our back office, I think we have, with the decades of experience our team has collectively, I think we have the best construction team in Southwest Florida.
Yeah.
And the thing that we're doing now, you know, you close a construction loan, that's just when the work begins. Our whole back office staff is managing the draw schedules, the inspections. We've got to keep them moving so these contractors, when they have crews there, they need their draw, and we get it done quickly. The difficulty we have right now is, like you said, the supplies.
Yeah.
We've now got to really time out a construction loan like we've never done before. We may have to delay a closing because we don't want to close a construction loan if they can't get a permit for 90 days.
Yeah.
It doesn't make any sense. The challenge, like you talked about, we brought in a one-time closing Fannie Mae construction loan.
Okay.
So we build the home with SanCap, but it closes up front. And when it closes up front, essentially when that home is about 60 days near completion, we lock their permanent rate. For no fee, it rolls into their 30-year fixed.
Yeah.
So they don't have to close the loan twice.
Okay.
It's a big savings.
Yeah.
Everybody wants to do it. Problem is you only have,
What's your savings on?
well, on a typical loan, it's close to $10,000, can be $15,000.
But what are those fees? Is that title insurance you're talking about?
Yep.
Things like that?
Yeah, I mean,
a lot of people don't understand that.
No, they don't. And
Doc stamps.
It can be expensive to transact in real estate in Florida.
Yeah.
So you've got your intangibles, your doc stamps,
Yeah.
appraisals, title fees, and things like that.
Yeah.
So what we try to do is cut all that out by having the one-time closing up front.
Yeah.
And then we draw it out, and then once it's near, we lock it, and it rolls right in. The difficulty with that is you only have 18 months to perform with Fannie Mae.
Yeah.
And we like to cut it down to 16 because we need time to make sure that we can get it done and packaged up. And
So
get
you
that
better
out
get
there.
a good builder too.
We do, and that exactly. And we work with a real long
So
list
you're
of
looking
good
at the builders that they're choosing. This is something that
we
you
have an
guys are
approved
pretty-
builders list for
Yeah,
sure.
That's
Yeah.
great. That's
Yeah.
great. So we got your typical financing that we talked about. We've got bridge loans. We've got construction loans. Refinance.
Refinance.
What about refinancing?
Well, refinancing right now, we're slowing down on that.
Okay.
Because
Why is that?
Well, because everyone knew and they talked about we were in a really historically low period. Right after COVID started, we had that huge influx. Folks are still refinancing now. If you're seeing refinances now, it's more probably for cash out for something.
Yeah.
Because
So if they want to do improvements to their home.
Yeah, they're not chasing that low rate
Yeah.
as much as maybe just, maybe taking some liquidity.
That's why I was telling a friend the other day, he was contemplating selling. I'm like going, Mike, I mean, you've wanted to do those improvements to your home. Now's a great time to do that. Pull some money out. You got incredible equity on that. What's that really going to do to your payment? Mm-hmm. And that's what he's going to do.
Yeah, and a 30-year note is
Yeah.
not going to move the needle much on the monthly payment. And like you said, I'd rather have my money in the market working for me when I can borrow money at 4%, 3%, whatever it needs to be.
Well, he was going to go to waterfront. The waterfront has gone through the roof. I said, Mike, pull some money out of the house, buy a documentium, put that boat that you want to be on the water. Instead of paying waterfront prices, buy the documentium, improve the home, and live happily ever after.
Yeah, that's the lifestyle he's looking for.
You know
Sure.
what? I'm going to do that.
Yeah, it makes perfect sense. Yeah, you have to be nimble right now for sure.
Yeah. Probably didn't help me too much. Because, but that's what I'm here for, is to help people make a good decision.
You're out there. You see what's going on. You're able to advise them properly.
We've known each other for a long time.
05?
Yeah, been a while.
Yeah.
So through that bad time, all the way through, and now we're in a really incredible time. But I think we're, again, like talking about before, Southwest Florida, Fort Myers, Sanibel and Captiva even, very deserving of such, because I think the values have always been lower than what they should have. And I think people are realizing that. People are coming from all over the country. They don't know what Fort Myers. They know Tampa. They know Miami. They know Orlando. They know where Mickey lives. But they didn't know about Fort Myers.
No.
And now we've finally been found.
Yeah. And again, when you do when you do that comparison with Sarasota, us, Naples, even though the prices have been high, I still think we're undervalued.
I think so too, and it's 10 degrees colder up in Sarasota.
On
a
right.
cold day.
That's right. I heard you say that with Phil. Yeah, exactly.
So refinance, talked about that. What else? Anything else?
Just your standard purchase loans. What's great about us, half of what we do gets packaged up and goes out to Fannie Mae, Freddie Mac. We have VA, FHA. We have it all. And those are your conventional loans.
Yeah.
The other half we keep in-house. So that's where we do all of the, lot loans, bridge loans, tons of construction loans. That's mainly what I do.
Yeah.
My pipeline right now is 75% construction loans.
That's great.
I mean, dozens of them.
That's amazing.
And, people understand it, that, they appreciate that we time it right.
Yeah.
Because, we're not just trying to get them in and closed and then sit on our hands. We want to work with the builder, work with the client. A lot of our clients are out of state, so when we go out and do our inspections, we're photographing the home for them, the progress.
Yeah.
They know that we're taking care of all the liens and everything that needs to be watched during the whole process. So, it's for us, it's really a partnership with these folks for a long period of time, and they appreciate that we sometimes stall it out a little bit. While if we find out, they can't get materials, we'll get with the builder and say, what do you really see for a projection here? Do you want me to hold off on the closing for a little bit so that we can have a really good streamlined process? Because once we hit the ground running on those one-time closings, we want to wrap those up in 16 months or under.
Unless people are, born against their, assets. Maybe they have money at Merrill Lynch or whatever like that. I mean, you get a lot of guys doing that kind of thing. But if they're coming down, I just am a big believer. Work with your local banks. Yeah. I mean, Bank of America, there's nothing wrong with them.
Right.
Wells Fargo, there's nothing wrong with good banks. Yeah. Great banks. But, we saw this before. SanCap Community. I don't know if I know of another bank that stood by their clients in the toughest times to work things out. SanCap Community Bank was started on Sanibel and Captiva. That's where the name comes from.
2003, yeah.
But it's not just a Sanibel Captiva community bank.
No.
It's Southwest Florida. You're down in Naples, you're in Fort Myers, you're in Cape Coral. I mean, you service all of Southwest Florida.
Yeah.
And what I like about it, too, is it's a very friendly, real bank. When you walk in there, you get a nice hello. It's just real people.
Yeah.
And I know a lot of people over there. And hey, I do refer to other banks too, but I love SanCap Community. And they do
appreciate
a great job.
it.
The president, Craig Albert.
Great.
And you got Kyle.
Kyle's doing a bang-up job.
Lana is one of my friends and sits on a board with me. She's an awesome human being.
House.
Valerie's House.
Great organization. You do great work over there.
Thank you. And you guys, again, that's another avenue of SanCap Community Bank. You not only help these clients that we're talking about and buyers coming in and existing homeowners with refi, you're giving back to the community.
We are.
And you don't just give to Valerie's House. Thank you so much. But you're giving to a lot of organizations out there that are making impact.
Yeah.
Making a huge impact for our area.
Yeah. We really key in on all of that type of stuff. We're giving back. We're in there with these organizations.
Yeah.
We have some of our folks sitting on the boards.
Yeah.
We got a good pulse of the community going on. We know where people need help.
Yeah.
And, community bank, we're there for them.
And incredible board members.
Oh, yeah.
Incredible employees.
Yes. Yeah.
I know most of those people that started that bank. I wish I would have gotten involved, but they told me to, but I didn't.
Yeah.
Shame on me,
wow.
But great bank and
it
good
is.
people,
Yeah.
and a lot of them are still there. And if they're not on the board, they're still very involved.
The board members will come in for their meetings,
Yeah.
and they'll stop by your office
Yeah.
and chat with you and make sure everybody's doing good.
Yeah.
They're really supportive. It is a family environment for sure.
Not to mention, I'll just say his first name. Is Marty still on the board?
Marty's still on the board.
Doc Ford's.
Doesn't get any better.
Doesn't get any better.
No,
and they're not just on Sanibel and Captiva. Just like Sanibel Captiva Community Bank, they're in St. Pete.
Yeah.
They're in Fort Myers Beach.
Yeah.
You know, what an incredible restaurant, great theme, all that. They've done an incredible job with that, too.
Marty's always smiling.
Yeah.
He
should be. He's a nice man. Former mayor, too, of Sanibel.
Yeah. Remember, we used to coach the kids in baseball out on Sanibel.
Yeah.
Yeah. Stretch out with him, and he did his thing. And, you know, I'm proud of what they've done with Doc Ford's. And we boat over there, and we tie off and go to lunch, and we have a blast. It's a great place. Yeah.
That's the thing. I always tell people, I grew up in Fort Myers. Been here since I was 3, 54 now. You know, Fort Myers is where I grew up. You don't forget where you come from. And it's still real. That old guard's still here. Same thing with Sanibel and Captiva, though. A lot of those not old, but families that have been out there for a long time, and people have come back, and their kids have come back, and just generation after generation. It's a special community. Not that Naples is not like that, but I don't know. Fort Myers, Sanibel and Captiva.
Very tight-knit.
I think so, too.
For
Very
sure.
real, too.
Very real, yep.
You know?
Yeah.
So
you'll run into and be having lunch with someone who owns one of the largest companies in the area, and everybody just kind of stays together, and there's a lot of good relationships. Like you said, different people on our board, a lot of different industries.
Yeah.
You know, and you socialize and you go to functions together, and, you know, they're just real good people.
Yeah.
Everybody's got each other's back.
So SanCap Community Bank, anything you want to tell the community out there about besides what we've already talked about?
Well, essentially, we're going to be there for you.
Yep.
Now, whatever happens here, like I said, I don't think anyone should be panicking. I think we've got a good handle. I see COVID's winding down.
Yeah.
You know, hopefully.
We hope.
Yeah. All signs point toward that direction.
Yep.
If we can open up and we can, you know, let's face it, we know rates are going to come up a little bit. If they can come up moderate and just, you know, have some slow and steady increases, that we get the economy and everything doing what the Fed wants it to do, you know, we can get back to normal business. So we're going to be there for the community. We're going to be there for the folks who want to open up businesses and do everything that they want to do. We just want to sit down with folks and talk to them about how we can help them.
And Mike Hartman.
Mike McMurray.
But a little bit about Mike Hartman. What do you want to tell the community about Mike Hartman, how you can help them? Whether it's helping them with a loan or just helping them make a good decision. I always tell people, hey, call Mike.
I appreciate it.
And he'll be straight up with you.
Yeah.
And if he can help you, he'll help you. If he points you in another direction, it's about you, the client.
That's it.
Yeah, they want your business.
Yep.
But they want to point you in the right direction. Hopefully it's with you guys, and hopefully it's with you.
Yeah.
And I always tell people, hey, you're in great hands. Not only with SanCap Community Bank, but with Mike Hartman.
I appreciate it, Mike. And we do the same in your team with Tom and Chad. You know, it's a good symbiotic relationship.
Yeah.
So, I mean, about me, one of the best things I like, I go to work. These meetings with clients are very fun. They're casual, kind of like what we're doing now. We talk through it. We consider ourselves problem solvers. When people are trying to move and do things and coordinate, we get involved. And I'll be honest with you, the reason I'm at this bank, because of our portfolio, we can do things that you couldn't do at most normal banks.
Yeah.
And I've given loans to folks that really were in a tough spot, and they needed us to just work with them. And we've done it, and we've provided for, you know, that need. And you get up out of bed every day and go, it makes me feel good to help.
Yeah.
And this bank's taught me a lot about helping people and getting involved in the community.
Yeah.
Yeah.
Trust, honesty,
integrity.
all those things, integrity, professionalism, all those things that you look for in people like yourself, but also in a bank like SanCap Community.
Yeah. You know, we talk about it all the time, Mike. It's relationships, right?
Yep.
Everything revolves around relationships, mutual respect.
Yep.
We approach every situation like that. We want to build a new friend.
Yep.
We want to build something tight-knit with people who are going to grow the community. We're all come up together.
Yeah. Appreciate knowing you. Appreciate
you having me, Mike. Hey,
SanCap Community Bank.
Continue.
Mike Hartman. Go see them.
Yep.
They're one of the best.
Thanks, Mike.
You're one of the best.
Thanks for having us. You are as well.
Thanks, man.